All right, let's talk about BRC Asia, Singapore's top steel provider. Now get this, they just posted their highest profit in company history during a year when steel prices were actually falling. So how in the world did they manage that? And more importantly, can they keep the momentum going? We're going to break down their absolutely record-breaking 2025 fiscal year to find out. Here's how we're going to do it. First, we'll hit you with the headline number. Then, we're going to look under the hood at the engine, how they won. After that, we'll check the foundation to see if it's solid. And finally, we'll look out to the horizon and see what the future might hold. A nice, clear roadmap. Okay, let's just get right to it. Section 1, the headline. When you boil down an entire year of work, what's that one number that tells you pretty much everything you need to know? And there it is. 94.1 million Singapore dollars. That's BRC Asia's net profit for fiscal year 2025. And why is that number so special? Well, because it's the highest net profit they've ever had in the company's entire history, a true record breaker. So a number like that, it just begs the next question, right? How did they do it? Let's pop the hood open in this next section, the engine, and really dig into the key factors that powered this incredible performance. It all starts at the top with revenue. As you can see, their top line grew by 5%, from 1.48 billion up to 1.55 billion. I mean, that's a solid jump. But the really interesting part isn't just that it went up, it's why. And the reason is, well, it's not what you'd expect. And this right here, this is the secret sauce. You see, they weren't making more money by jacking up prices. Actually, it was the opposite. Because global steel costs were falling, their average selling prices were lower. So the key was just pure volume. They simply delivered a ton more steel, especially in the back half of the year, as big construction projects really got going. More volume just completely blew past the lower prices. Growing revenue is one thing, but managing your costs is where the real magic happens for your bottom line. And BRC was incredibly smart about this. On the left, check this out. Their finance costs dropped by a massive 34%. That's thanks to lower interest rates and just having a lot of cash on hand. Basically, they were paying way less on their debt. Now, on the right, yeah, some costs like distribution went up, but that's actually a good problem to have. It's tied directly to their growth and some new acquisitions. It's just the cost of doing a lot more business. So this brings us to a really important part. A record profit is fantastic, of course, but is it built on a house of cards, or is it sitting on a solid foundation? Let's take a look at the company's financial health and see just how stable things are. And this number tells you a lot. Over $203 million in cash and cash equivalents. What does that mean? It means the company has an extremely healthy and liquid balance sheet. It's a huge financial cushion that gives them all sorts of flexibility and resilience. Now, these three numbers together, they tell a powerful story of some really smart management. First, inventories went down. That means they're selling what they make super efficiently, not just letting it sit around. Next, trade receivables. That's the money customers owe them. That went up, which makes total sense when your sales are up. And maybe most importantly, their loans and borrowings went down. They're actively paying off their debt, making their financial position even stronger. Okay. So they absolutely crushed it this year, and their financials look rock solid. That brings us to our final section, the horizon. What does the future actually look like for BRC Asia? Where are they heading from here? If you're going to remember one number about BRC's future, make it this one, $1.9 billion. That is the value of their sales order book. Think of it like confirmed locked-in jobs for the future. It gives them incredible visibility into their earnings for up to the next 5 years, especially with massive public projects like the foundation work for Changi Airport's new Terminal 5 on the books. And you gotta understand, BRC isn't just succeeding in a vacuum. The whole market is booming. The outlook for Singapore's construction sector is just incredibly strong. We're talking up to $53 billion in demand for 2025 alone. With these giant projects like Changi T5, all the public housing and MRT expansions, the entire industry is in a massive upcycle, and BRC is sitting right in the middle of it. And hey, don't just take my word for it. This quote from the group CEO, Siha Kin Peng, really sums up the whole company's attitude. They're not just passively riding this wave, they see themselves as a key partner in building the nation. And that focus on better, faster, cheaper, that tells you they know exactly what this booming market needs. But, and you knew there was gonna be a but. There's always a catch. A market this hot doesn't go unnoticed for long. The financial report is really clear on this. This amazing environment is attracting new companies and pushing existing ones to get more aggressive. So while the pie is definitely getting bigger, a lot more people are showing up wanting a slice. The competition is heating up for sure. So that leaves us with the final and really the most critical question. BRC Asia has this historic order book, a solid financial base. They're in an incredible position. But with those competitive pressures getting stronger, the real challenge will be to defend their spot at the top and maintain that profitability. So, can they keep building on this incredible success? Well, that is going to be the story to watch.